Welcome to the stock workout where we flex on the market to make gains. In this video, I'm going to be talking about Microvision, ticker symbol MVIS. Now, I'm pumped about this. This is due to break out. Let's put it out there first and foremost. This is due to break out. It is set to break out. It had a great day on Friday, up 12% for the day, and in the after hours it went up again a couple of percent. Closed on Friday at $20.25, and in the after hours went up to $20.60. In this video, I'm going to be going over a little bit of news about Microvision, and also this news is about banks potentially stopping the short sale of this stock. And then we're going to take a look at the technicals and the charts. So let's start off with this article. It's from the Motley Fool. It says why Microvision stock popped, but BlackBerry costs and Naked Brand dropped. So Microvision was the big winner of the group. Shares of the autonomous vehicle technology company jumped on news that several big banks would block short selling on the volatile stock. Now that's good. That is a good thing for this. These stocks have been shorted way too much, more than they need to be, and it's just a money grabbing thing that these funds are doing. They're just trying to grab the money off retail investors. So you know what? I'm quite happy to see that they will potentially block the short sale of these stocks. So it starts off by saying retail traders have been pumping up shares of meme stocks led by AMC Entertainment and GameStop over the last 2 weeks in an attempt to execute short squeezes on some of the same stocks that jumped in January on the first wave of interest in these stocks. Bloomberg reported this afternoon that banks such as Goldman Sachs, Bank of America, and Jefferies would take steps to block short selling in AMC, GameStop, and Microvision that seemed to help lift shares of Microvision higher as the LiDAR stock gained in high volume trading. At one point, the stock was up 27.6%. 22% of its stock was short sold as of mid-May. So then it goes on to just talk about a few other things and a few other stocks, but it says now what, and this is the interesting part. It says that there's no fundamental explanation for the meme stock rally, which shocked investors back in January, but has been less of a surprise in the second time around. Many of the businesses have poor prospects, are losing money, or are growing slowly. Still, that hasn't stopped retail investors from piling into these stocks to drive eye-popping gains, seemingly out of nowhere. For long-term investors, these stocks are probably best avoided. The single-day pops can quickly be given back, as today's pullback shows, and there's little fundamental justification for the gains in the prices. Still, the strategy has been a successful one for some investors, which means it's likely to continue. The moves by major banks to crack down on short selling in these stocks could soften the volatility. So, this article is talking about the fact that the banks could crack down on the short selling of these stocks, and when they do that they'll be less volatile. Now that's good for everybody else, because then you will see natural growth in that share price and you're not going to see the huge fluctuations that we have been seeing. Me personally, I am bullish on Microvision. I've invested in this 2 or 3 times before. And it is set to do great things with this LiDAR technology. I quite like the company and the fundamentals to it, and I would like to see that banks crack down on the short selling of these stocks because it is way overly shorted. So if I take a look here at FinVis, so this is FinVis. You can see here Microvision here, and the short flow is 21.62%. That is just crazy. That is crazy. And the reason why these are shorted so much is just these funds are just trying to grab money off us retail investors. They're just trying to short it as much as they can, manipulate the price, and just grab our money. So I quite like the fact that retail investors are fighting back and are doing these short squeezes on these stocks to get money back off them ETF funds. It's like a versus B scenario. Obviously, we're the A side, don't forget that. um, so yeah, what I'll do is I'll leave the link to this article in the description down below so you can have a read of it yourself. But that's a positive thing, to see that these banks would take steps to block short selling in these stocks. So I like that. Right, now let's take a look at the charts. As we know, Microvision is 21.62% shorted, which is quite a lot. But what is the charts saying? So I'll start off by saying I've got the 21-day EMA on the screen alongside the 50, 100 and 200-day moving averages. I've got the volume and the RSI. First off, let's start with volume. Volume is at 50 million on Friday, and the average volume in the last 10 days was only 20 million. Market cap sat at 3.199 billion, just a hair under 3.2 billion. And volume was over double its average volume. So that is a very, very good indication. Also, one thing to bear in mind here is we have broken out of this sideways moving channel. Now, I've just drawn that on the screen here. In between these two blue lines, we have just been sort of zigzagging up and down in between these two lines here. So we have now broken out of that sideways moving channel. We broke out sort of around a week ago. This is a very, very good sign and point from here. So that is the first point I wanted to make. Now, if I talk about the 21-day EMA, so currently the 21-day EMA, around 2 weeks ago, it started crossing over that 50-day and 100-day moving average, and then a few days later, it crossed over that 200-day moving average as well. Currently, the 21-day EMA is trading above all three moving averages, which shows that bulls are in control. Very good indication there. Very good sign, and it is strong. It's a good strong indicator to show that bulls are now back in control. And the second thing that I did want to point out is we seem to have been making higher lows, right? And also higher highs. So as you can see here, we have this low here, then we have a second one here. We sort of are nearly touched it here, and we just seem to be going higher and higher. And we are also making higher highs. So from here to here, as you can see, we just seem to be moving up and up. There you go. So higher highs we're making, and also higher highs, sorry, at the top here, higher highs, and also higher lows. So this is trending upwards. We seem to have had a trend reversal back here, and this is now trending upwards. So I accidentally got rid of the moving averages, and now I've just pulled them back on the screen. But what I was saying is we are making a series of higher lows and also a series of higher highs. So this stock is now trending upwards. That's the overall picture of the chart. This is the hourly chart. So the bulls are currently in control of this. Volume is quite high, over double the volume, which is good to see. Now, if I zoom in on this and if I go onto a more microscopic time frame, now I've zoomed into this on a 15-minute chart, and late on Friday, in the second half of the day, it seems to me like we have formed this cup and handle formation. Now I'll just draw that for everybody to see. You can see that the stock price comes down here, goes up here, and this seems to me like we have a cup and handle formation right there. So in my opinion, this is set to break out. Given the fact that it's trending upwards as well, setting a series of higher lows and higher highs, and now we've seen this cup and handle formation. In my opinion, this is set to break out. RSI is sat at 55. So RSI is set at 55, which is pretty much neutral, so that is a good thing to see. And I think we are about to break out. So from a more microscopic perspective, cup and handle formation here, we broke out of that descending, that sideways channel that I pointed out before. We broke out of that sideways channel, just moving, zigzagging up and down throughout that, and now we are moving up. Cup and handle formation here. When and are we going to retest that high that we saw back earlier in the year of around this $30? When and are we going to see that? That is the question. Cup and handle formation here. I'm bullish on this. I think we're moving upwards. The short interest is at over 20%. Quite possibly we could absolutely squeeze this. quite possibly we could, because short interest is quite high and we are moving up. Bulls are in control on this, so quite possibly we could see another squeeze. Like we saw earlier on, we could see another squeeze with this, and the fact that we've got that cup and handle as well, it just seems to me that we are about to break out. We are about to break out, and it's just a matter of time. So let's see what happens. If you appreciate that, drop the video a like, subscribe to the channel so I can keep bringing you more content, and I'll see you on the next one.